All right, hey guys, it's Axe here. I just wanted to give you a quick weekend update regarding the PCRIs. Hopefully, you've watched the first video that introduces how the PCRIs work. Again, it stands for put call ratio indicators, and I wanted to do this to give you time in advance of Monday to make any plans for trades, charts, things like that, because we're getting to a point now where the rally is extended and while we do expect prices to continue higher over the next several months, it's possible you can get a quick pullback. So I just want to explain where we're at and give you some things to look out for as we move forward next week and into OPEX the following week. So here we are, SPX. You can see we've essentially tagged the upper resistance here. And it doesn't mean anything on its own. Like we always say, we want to find confluence, but we were rejected initially today. If we went down to like a shorter time frame, you can see we sort of went above it, back underneath. Let me go back here. So we do have that data point, which is basically we're at resistance. We've gained, if we just do a quick from the low here, and these are closing bars. These are not wicks, but we over 9% gain. So we gained 9% from the low, and it's been pretty one way. So these are things that start to get us thinking, okay, what should we do to prepare for any downside? When's the downside coming, etc. You can see, I mean, there's many cases where we've sort of gone up over a period of time and gained. Well, that's 9% there. If we just take this low here, we're at 24%. So it's not impossible that we'll continue up, but you can see sort of right here in July, it's similar shape, to be honest with you. The readings aren't quite the same, but readings aren't everything. They're most of it, but they're not everything. So we're always looking for confluence, which sort of fractals stand out. But in general, we don't really have the melt up like we had in September or in June. But when you consider the move, like this was a breakout here in May to June, when you consider sort of the breakout that we had, bottom line is we're due for a surprise of some sort. And it could be one day, it could be a week. Like we've expected that that would happen over OPEX, which is the third week of the month. So anything can happen, but these are the things we start to look for. Anyway, not to ramble on too much. So if we look at the indicator here, you can see some of the examples we've given. First of all, right here down on the bottom, we've got a sort of overheated on the low, which would be euphoria. And we haven't had that reading. I had to go back, I think it was, yeah, here, September of 2012. And I'm going to switch to daily here, just so I can go back to that data. And I did post a chart of this, but if you see September of 2012, there was a move of about 15%, and then a correction of about 10%. Okay, we're not quite there on the 15%, but it doesn't mean we shouldn't be cautious here. You can see there's a small pullback. It's really tough to see, but from 1415 at the high to about 1400, which at the time, let's just get a quick look here, which at the time was bigger than it would be for us now. But that was in 2012, and I think there's another one back here in 2009 or 10, which was right before we started. Actually, it was '07. You can see right around here. It was on the way down already, and so we sort of threw that fractal out because this one, the high was already made, and it sort of bounced bear flag, and that's when they got the euphoria. We're actually showing euphoria on a rally, so it's a little bit different. But anyway, just want to give you an indication of how rare it is to be this extended below. It doesn't always mean that we're going to reverse. It just means that things are extreme and anything can happen. So if we're looking at the PCRI, one of the things that we're looking at here is for a sell signal to manifest, as we talked about before, these lines have to sort of curve back up to the red, right? We're still a long way from that. But you can see here on the second indicator below, once the blue crosses over, it usually signals that we're near a top or that some more downside is coming. In December, Um, and I'm just going to draw a quick line so you can understand what I mean here. Change the color of that just to help it stand out. So this pink line here shows sort of extremes on the euphoric side. And here in April of 2020, it was really choppy. That was after the COVID crash, so it's it's less likely that we already broke through some of that, so it's less likely that we're going to experience that, though we could. Um, Here in June, that was sort of a melt up, and again, we've gone up 9%, but it's not quite the same trajectory. But that's another example. I like this December of 2020. And again, you can see where it crossed over here. We let's see, 3702. That was about 50 points, 55 points, and those are closing bars again. So there's a little bit of room for error, give or take a few points. And here in June, you can see we topped, and basically that was the 18th of June. We set a low that was Opex. So this one, we bottomed on the indicator on June 9th, and then we hit a peak on June 14th, about a week. And since we expected some selling into Opex, it's a very likely model of what we could expect here, which is we're we may see this indicator curve back up, and already here you can see we're moving lower. Again, I'll draw lines just to make it easy for you, but we're moving lower in terms of euphoria and put call ratio. But we're starting to cross back over here, and this could break out. I'll use the white line just sort of as a wedge. So the white and the pink, we could break out here, and that pushes us towards puts and hedging activity from market makers, which would curl these indicators back up. And you can see we've sort of crossed over here a few times. But if these start to curl up, that says, hey, we may be nearing a top. And I would look for Monday, probably rally, chop through the rest of the week, and we'll be able to tell if selling is coming, because again, these indicators will start to curl back up, and this will cross over here, and this will start to move back up as well. But also because some of the names that we're used to seeing, up on market green days may be heavily sold. And so if we start to see a lot of distribution or breadth issues under the surface, we know, okay, maybe OPEX is going to be a sell event. And again, it doesn't have to mean that we're down 5 to 10%. It could just mean 1% or 2%, and it could happen over a period of 2 days. But if you're not ready for that, if you don't have some volatility, some VXX or VIX futures, or maybe a couple shorts or some puts, some hedges, whatever your strategy is, we like to do a little volatility, maybe buy a couple inverse ETFs, SQQQ, SPXX, SH, that sort of thing. If you don't have that handy to hedge your portfolio, that one day hurts, and it could take a little bit for your charts to bounce back. And of course, we're going to set stops in advance, and we're going to know where our entries and exits are on these moves. But in general, you can see we're starting to curl up. And like I mentioned, in June, we went down, we went back up, we went down, and we still went up over 200 points here. Our target was around 47.20 to 47.40, and I would say by Monday we'll probably have hit our target. And then we're expecting a little bit of a pushback, maybe 1 to 2%. Maybe we go down to 4,600, 4,550, and then we're looking to get into the 4,800s and maybe 4,900 by Christmas, by the end of the year. We still think 5,100 by spring, but that's a long timeline, and there could be a lot of chop. We've seen small caps break out. They're due for a pullback. We started to see the airlines and the real economy stocks start to bounce, and I think we'll continue to see some of that, as maybe the bonds were up today on Friday the 5th, and tech, to be honest, didn't hold up that well. We were up 30 points, we reversed it, and we finished in the middle of the range, likely an OPEX pin. But if tech's struggling with a tailwind, then if bonds start to show some weakness, then tech could really start to struggle. So then you're going to look for Tesla, Apple, AMD, Nvidia, those sort of things to maybe show some weakness or chop at best. So just wanted to give you an idea as we post the PCRs next week. We try to post them a couple times a day. Lately, we haven't been posting a lot because it's been It's been pretty one-sided. But we're going to start posting them next week. Pretty much look for a morning update and then a lunchtime chart. But just want to show you what to look for, why we're saying, hey, maybe it's time to exercise a little bit of caution here, and what to prepare for in terms of possible pullbacks. And again, we could get a 5 to 10 to 15% correction. We don't know. We don't have a sell signal yet, so I'm not going to say sell everything. But we do want to exercise caution, be ready, not be surprised by any downside activity. And Monday could come, and this could just drop down to the bottom. Indicators could reverse bullish again, and we just wait. But it's better to be prepared and have the mindset to be ready than to be caught off guard. So there you go. Hit us up with any questions. I'll be posting this on YouTube and on the Twitter feed. Feel free to hit us up with questions on Twitter or the Discord. If you don't have the Discord link, check the pinned tweet on CakeTrades Pro. Thanks.